Thanks, Dan, and thanks for having us out here today. We're having a great time. Great speakers. Just so you guys know, we make sure that the speakers that are in this event, their stuff works. It works great. And I'm going to move to my disclaimer slide. I'll let you read that while I chat because I know how much you guys love reading that screen. So I'll let you read the disclaimer. Great speakers. The last speaker talking about trend lines. You know, if you're not using trend lines in your trading, I think you're at a very, very big disadvantage. And it really is the psychology of the markets, a very strong way to trade. So understand that we just don't have speakers here like Wiz and, uh, Top Gun Options just because we want them here. They're here because they're good traders, they know what they're doing, and they make money. So that's what MarketFest is all about. All right, so today I'm going to talk about the level 2 screen. Now, do you ever feel when you get into a trade and you get in, you feel good, and then out of nowhere, in milliseconds, you absolutely get smacked, and you're in the trade for just a few seconds, all of a sudden, instantaneously, you lost or you're down big. It's the worst feeling you can ever feel as a trader because you absolutely made the wrong decision. And we know trading is all about probabilities and you want to take the emotion out of it and all that kind of stuff. But when you get into a trade and it instantly goes against you, you've done something majorly wrong. Hey, good afternoon, Ted. Thanks for checking in. So what I'm going to try to piece together for you, and I know you guys have your own systems and you've been trading the way you've been trading for a while, and you've probably picked up some great ideas during MarketFest. And just so you guys know, one new idea, one new way of thinking, or just one little thing to maybe add or subtract from your trading can absolutely make a major change in your trading. And just a quick story. Have you guys ever been to Boca Raton? There's a nice little trading firm down there called Schonfeld Securities. And it's a whole group of mainly middle-aged guys all day trading in the same room. And I got a chance to trade there a while back, and there were two traders sitting right next to each other. Same trading system, and roughly the same account size. And I got to sit next to these guys for about a week, and I learned a lot. The guy on the left was making $2,000 to $3,000 a day. The guy to the right was barely breaking even, barely making enough just to pay his data feed bills. And they're trading the same system. And being there for a week, on the fourth day there, I asked the guy who was making all the money, I go, guys, you guys are trading the same system. Why are you making so much money and this guy's just barely getting by? He goes, well, here's the difference. And this is back in the old stock days, right? We trade by eighths and teenies and quarters and that kind of thing. And he goes, well, basically, I give each trade an eighth, which is about 12.5 cents more stop than the other guy. And the other guy is so clinched to keep a very, very tight stop that, when we trade 8 or 10 trades in the morning, I don't get stopped out as often as he does because I give it a little bit more room. But he's so hell-bent on not losing that he gets stopped out more than I do. So basically, the only difference between you two in your trading, trade for trade, is your stop is 1/8 of a tick bigger, 12.5 cents, and you're making 10 times more than the other guy. You go, yeah, pretty much. So that one little distinction makes such a big difference. And that's what MarketFest is all about, finding that one distinction. And what I hope you guys will see today, and I talk about the level 2, we've had other traders on here to talk about the level 2, the level 3, the level 1 trading screen, and I'll show that to you in a minute. Some of you guys know all about it. Some of you guys may have seen it for the first time. But I really want to get you guys around not getting smacked. Because how many times you've been in a trade, you get in and instantly you get killed. It is no fun. What I mean by getting killed is you instantly lose. It's the worst feeling in the world. So today is all about giving you one tool that will help you minimize. No, nothing's 100%. If anybody's got a 100% system, I'd love to hear it. And I know trading computers or the high frequency trader stuff, they do very, very well. But that's a whole other world, so don't bring that up. I know I get people coming in with all these different answers, but we're in a different time frame as the high frequency traders. We're in a different time frame than the mutual funds. We're in our own time frame that we can have an edge on the market to do very, very well. What we want to uncover today, though, is see where the institutions are sitting, how to spot them, and how to trade with them or how to trade around them. So let me bring up a level 2 screen. So this is a level 2 screen, and this is on oil. And I love to trade oil. Why? Because oil moves, and it can move fast and it can move quick. And it's a very, very high volume thing to trade. And in this market, I'll tell you, it's a lot of fun to trade. So this is a level 2 screen. I'll just kind of walk you through what you're looking at. On the left-hand side, we've got the bid. And on the right-hand side, we've got the ask. What does that really mean? Well, over here, we've got people that are buying. And over here, we got people that are selling. So what we have got going on is, let's go to the right-hand side. I'm all here, right, guys? Okay, good. On the right-hand side, at 48.44, we've got 44 contracts that people are willing to sell. And on the left-hand side, we've got people willing to buy oil contracts at 48.43 and a quantity of 16. So we've got the buyers and the sellers. Now this is an auction, and it works very, very much like an auction. And I know I've got some students in the room, so when I ask some questions on some of these, just sit back and let the brand new people in the room today answer that. But the biggest question I ask traders, and it's almost like the first question you should even ask yourself before you start trading real money, start trading live money. But ask yourself the question. When you look at a chart, and let's look at a live chart right now. When you look at a live chart, and I'll bring up a live chart on oil, ask yourself this question, and I'm going to ask you guys this question. Why did price move up? Why did price move sideways? Why did price move down? What made it move? What made move? Why did price move? Now answer the question. I want to see what kind of level of students we have in the room today. And if you're a current student of mine, I know you're going to give me the right answer. And everyone's saying supply and demand, volume is moving it. Okay, well, great. Volume's coming in. What specifically? Let's kind of drill down a little bit more. Why did price move from here up to here? Why did it move? More buyers and sellers? Nope. Actually, let me drill down even more. Why did it move? Why did it move? Okay, fear and confidence, buyers hitting the offer. Okay, you're getting close, Fitz. You're getting close. High frequency influence, more buyers, more sellers. Think about this. You're at an auction. And let's say for fun, you're going to auction off this clock. We got a clock and we're going to auction it off. 1, 2, 3, 4, 5, 6, right? We got a clock, right? This is a clock. Now, what happens when an auction starts? 4 bid, you have it, you know, they say all that kind of fast stuff, right? You start out at a price. Let's say the price starts out at $100. Why should it go from $100 to $110? because someone is willing to pay market price for price to go from 100 to 110, right? They're willing to pay what the market is willing to bear. So if I were to bring in a level 2 screen and use the same concept of the market, and there's my level 2. Okay, here's a live level 2. If right now the clock value is at 48.91, why should price go to 14.92? Because someone is willing to pay market price and pay up and pay the higher price. Yes, it's the greater fool principle, right? Keep bidding it up higher, higher, higher. But the reason why price moves in an upward position is because people were coming in with market orders to move price higher. Something you haven't really heard before, have you? So when you're looking at a time and sales screen and you're looking at your level 2, the only reason why price moved is because someone was willing to pay a higher price on the market than what's going on. Pretty good information to know, isn't it? It kind of connects the dots for you, doesn't it? Now, do all auctions start out at a price and head up? Absolutely not. A lot of times auctions will start out and let's say it's $100. And price won't, and someone is going to come in and no one's bidding on it. No one's willing to say, no, I'm not going to pay $100. They might drop it to 90. They might drop it to 70. They might drop it to 60 before things happen. So auctions can move in both directions. So the beauty of the level 2, and what I'm going to get into today, is why the level 2 moves and how to spot the landmines or the situations that you get into trading so one thing doesn't happen to you. And what's the one thing? Getting smacked. So if we understand how the market moves, we're going to minimize not getting smacked. All right, so let's go back to the level 2. I'll change the background because I know this brings some bad fears into people when they trade. Okay, so we've got a level 2, and let's talk about level 2 for a minute, because level 2 is a situation where you're either looking at the real deal or you're looking at a situation where they're all lying to you. See, what people don't know as brand new traders is the market is one big lie. And it has to be that way, or the big boys would get squashed, or the big ladies would get squashed really, really fast. Because here's what goes on. Let's say you're Goldman Sachs. Let's say you're one of the big firms out there. Now, if you're trading oil and you want to trade, let's say, I don't know, 20,000 contracts of oil, and you want to get in at a price of 48.88. Hold on a second. How do you get into a trade of 20,000 contracts and not absolutely blast the markets? Well, here's the problem. And getting back to the market situation, the market order situation. If I'm in a trade and I want to get in, and when you get in as an institution, you don't get in at 49.89, you don't get in at 48.88. You get in at a range. You say, hey, look, I'm going to get in somewhere between this range here and maybe this range over, 48.80 to a range of, let's say, 49. It's a big range. You're getting in over that time period, or over the range of price. So when you're getting in 20,000 shares, you don't just get in one spot and you're going to blow a lot of people over. Now, if you want to get in and you want to get in at a market order with 20,000 shares, you're going to take out these guys, these guys, these guys. You're going to take out all these orders. And what's going to happen? Price are going to move up. I'll get into iceberg orders in just a moment. Iceberg orders are very important. So when they come in with big market orders, they move price up, and they move it up very, very rapidly. But here's what they'll do. And they use what's called a level 3 screen. And a level 3 will do this. Let's say they want to get into 20,000 shares, and they want to move the market higher. Well, here's what they'll do. They'll sit out there, and their screen's going to look like this. And what it's going to say is it's going to go size, and it's going to say show. And what they're going to do is they're really going to have 20,000 shares to sell, but they're only going to show maybe 10, or they may show 5. And on the level 2 screen of these 45 contracts right here, 10 of those is all they're going to show. And they do that because if you were to put 20,000 shares to sell, guess what that's doing? It's showing your hand, and it's showing what you're going to be doing. And you're not going to trade against them. They have to mask what they're doing. So as a trader, we want to uncover that. And I'll go back to my level 2 screen that I froze a little bit ago. And here's what the market's telling us. The market's telling us that at, let's say, 46.40 or 48.46, there's 132 orders out there. Now, how many contracts are normally showing on oil at most of the time? Around 44, 45. But right now, there's 3 times as much price being shown out there. Now let's get back to the first part of our discussion today about getting smacked. Here's the mistake that some traders make as new traders when they get into a trade. And they'll look at their chart, and here, let's just say for fun, this is our chart. Okay, there we go. So here, let's say the chart looks like this. And the chart's moving up, coming back down, moving up, coming back down, moving up. And their system says, oh, I'm going to buy right here. I'm going to get in, and I'm going to take this long now because my setup, all the lines are crossing, all the T's are being dotted, or I's dotted, T's crossed. And I'm going to go ahead and buy right here. And then all of a sudden you get in, and you're long, and then they smack you. Who's been there? Come on. Who's been there? Albert, you been there? Will, Fernando, Mylan, SP, right? Smack Daddy, right, Gary? You live there. Okay, great. We've all done it, okay? Everybody has been smacked. I don't care who you are as a trader. If you haven't been smacked, then you might as well go buy the lottery ticket, right? It's going to happen. But what's the question you ask yourself? Well, why didn't I see that? Bill, what could I have done to see that in the future? Well, let's take a look at that because it's a very important question. And, oh, wrong one. Do you really want to repeat getting smacked? Absolutely not. So here's what we're looking for. We're looking for big orders out there. So what may have happened is you decided to go long as prices were moving up at 48.46. Did you happen to take a peek under the hood and say, is there anybody out there that I may be trading against. Now, when we trade against the big firms, when we trade against the big money, more than not, we're going to lose. Why? Because their market orders are pushing price higher. And you decided to go long right here, and guess what took place? These orders came in and moved price right back down. And that's why it's maybe a reason, probably a high probable reason, why you got smacked, because there's orders sitting out there. So what I'm asking you, or what I'm suggesting that you guys do, is when you trade, have a level 2 screen up. Now, can you have the dome up? The dome, most domes only give you 5 levels up or so and 5 down. This dome, you see how it gives you 10 levels, 10 to the downside, 10 to the upside? You got to know, hey, look, up here at 48.52, I've got 113 orders sitting out there. Do I really want to trade against them? Absolutely not. Okay. Now, the thing is, what I guys just mentioned a little bit ago, is this a lie or is this the truth? I don't know. Now, there's different software out there, and we've had some people on MarketFest. You can probably, if you go look through our archives, we've had people talk about Iceberg Orders and their software that can uncover that stuff, which I think is great stuff. I personally can just look at this screen and I can figure out pretty quickly if I'm going to trade against them or if I'm going to trade with them. And I'll walk you through that today so you guys can see what I'm doing. Again, I'm not discounting any software out there. It's just, what I do. So are these big orders out there, are they real or are they fake? And guess what? We don't know. We don't know. And what we'll do is figure out if they're real or not. So here's what we do. Price is going to move. Guaranteed. Price will move up and down. Here's a real chart. And I'll put a level 2 screen up here right now and kind of bring things into fashion. All right, so right now, okay, so here's what we're looking at. And let me kind of mark the chart for you. At 82, I've got 103 orders. At 80, I've got 130. So if I were to kind of put a visual market order out there at 180, which is right here. Right here, I've got 127 orders out there. Now, are they real or are they not real? Well, I can tell you right now that we came down and we touched this level right there once. And we got close right here. Now, here's what I'm looking for. As price approaches this level, is this number staying the same? If they get within a tick or two on a commodity or on a future, or if they get within a nickel on a stock, if those orders stay at the same level, most likely, now again, I'm not going to use an absolute, most likely, they're real. If they go away, if they just suddenly disappear into thin air, then guess what? They're a pure game of lies and deceit. And you know that they don't want to trade, or that they don't want to be buying there, and they want to just step back. So that's what I'm looking for when I look at the level 2. So before I get into a trade, before I get into my strategy, I'm going to peek at the level 2, and I'm going to look at it and say, look, where are the potential areas of me getting smacked right now? And when it comes to oil, and every index, every stock is a little bit different. You got to do a little bit of research, but For oil, if you're trading oil, which is a CL, if I see over 100 contracts, generally I like to see about 125. That's an area where the institutions are trading, and there's a probability of getting smacked. And there's probably more things behind that than not. Now, if you notice at the bottom of my screen, I also have volume. Volume on your chart is an absolute must. Now, look at all the indicators on my chart. Woo, pretty busy, isn't it? Now, absolutely, this is probably the simplest chart you've probably seen all year at a presentation. I like to keep the whole presentation, or I like to keep my chart simple and not get distracted with all these lines and all this other stuff. Now, yes, I'll put trend lines on my chart. Trend lines are very, very important. Yes, I'll put volume both vertically and horizontally. Yes, there is horizontal volume that goes this way. It is called volume profile. Very important. Why? It'll tell you where the big money's hanging out. But here's the cool equation if you're watching stuff and just paying attention. Here's what you look for. You guys see this volume spike down here? 10,000 contracts. That's a lot on oil. Okay? Do you read tape and use it with level 2? No, I don't read tape. I have a buddy who's 87 named Tom, and on the floor of the New York Stock or the New York Stock Exchange, he used to read tape. I don't read tape. It's too fast. It's too quick. And there's a lot of great programs out there that will actually do the tape reading for you if you want to get more zoomed in. But what I'm trying to do also is not overcomplicate your trading. It's, any of you guys boaters out there? You guys go boating or go on the water or head out in the ocean or what have you? When you boat and you're heading out there, do you ever like scan the horizon to make sure that you're not going to run into another boat and get smacked, or you're not going to run over a kayaker or some smaller vessel? When you trade, I use a level 2 just as if I'm scanning out and looking and when I'm out there boating, looking at other, just make sure I'm not going to run into anything, run into an iceberg, run into another cruise ship. Youngest sailing instructor in the UK. All right, Fitz. You'd look pretty stupid if you're in your 25-foot cruiser and you weren't paying attention and you ran into the allure of the seas or a big cruise ship. I mean, you got to feel pretty stupid if you couldn't navigate around that, right? Guess what? Trading is just like running into a cruise ship. Right here, we got 2 cruise ships at port, right there. And we've got a good one here called the Oasis of the Seas right there doing 154. Oh, watch this, guys. Watch this. They're doing it. Okay, this is what I was waiting for. See how price dropped? Did you see how these guys went away? Where's volume? Nowhere. Guess what? These guys are nothing. This thing's going to drop. This is telling me right now that price is going to do this. I'm going to see oil drop like this. That's what it's telling me right now. Because it came right to that 80. Oh, don't you love it when you're doing a presentation and what you're talking about is happening live in front of everybody? Oh, you got to love it. You've got to love it. I couldn't time this any better, right? So remember 80 was showing at 125 people there? And did you see how there was zero volume really? Bam! I love it. I love it. Okay, there's no volume behind it. What does that mean? No one was there. You got to love it. So, boy, I couldn't time this any better. So here's what took place. Let me rewind it. There's 125 orders. And when price came to 80, guess what? It dropped to 75, it dropped to 50 very, very fast. There was no one behind there. So what's that saying? Oh, they're playing the game of, we're going to show you guys these big numbers here, but there's nothing behind it. I love it. Now, I wasn't really reading the tape. You got Starbucks for the week, Rob? Awesome. So they came in and they went away. Guess what? There's no one in the way. These guys are not real, and they're stepping aside. So, but you probably have your other indicators up on your chart, and I'm not going to get into, all indicators work sometime. Okay. So I'm not going to blast any indicators. I know which systems are low probable trades. I can tell you, if you have MACD stochastic crossover, I'm going to tell you it probably works 34.6% of the time. There's better indicators out there. Did I even have an indicator what I did right now? I didn't. I didn't look at anything. I just looked at what's happening there. And they smacked him out of the way right there. So right now, I'd be bearish on this trade. Now, chart formations are important. There's a lot of other important things that you need to look at on a chart. I'm not going to get into all that kind of stuff. All right. So what moved the market today, though? This is what moved the market. Big orders. See that big order? 10,000 contracts, moved it up. 2,000 contracts, moved it up, right? Third time, 2,000 contracts, guess what happened? This thing reads like a book. It moves right back down. And you see how volume is going down like this? Guess what's happening? They brought price up, volume is coming out of the market, brings it right back down. Pretty cool. So what I'm trying to really get to you guys is how important level 2 is, because level 2, it's not the mainstay of a trading system, but it's more of a way of, before you pull the trigger, before you decide, hey, I'm going to take risk and move price another direction, scan the horizon, see if there's a cruise ship in the way, see if there's a kayaker you might run over, or if it's just a medium-sized vessel, and make sure that you don't get smacked. And right now, we don't have any high-level numbers out there, so things can go either direction. So when we get into our trading, that's what I like to talk about a lot about. Now, what's another way I can trade this? You're going to say, well, John, what if there's cruise ships all the time and I want to go boating, and how do I get around if I see cruise ships all the time? Well, if you're going to look at the level 2, and before you get into a trade, make sure you know where these guys are. Now, this is where I'd be trading right now. Now, watch this. And I get into this in my course in much more detail. I just want to give you a little bit of flavor of what I'm going to do. See that 138 orders out there right there at 75? See those guys? Okay, so I'm going to move this right to 75. Now, I am in simulation, and I'm going to move this to my G3. Now, do I really want to get in at 75? No. Why? Because I don't know if these orders are real or not. Most likely, based on what they showed me down here, is they're not real. So what I would do is I would put an order in on the other side of these guys, right at 74. And I get into this in my course, and I show you how to do this in more detail. I'm just giving you the bird's eye helicopter view of the lake. So going along right here at 75, Probably is not a good idea because why? There's 159 orders out there ready to go long. Okay. Probably want to step aside a little bit on that. But what about 174? So think about this, ladies and gentlemen. If enough sell market orders are coming to the market to sell at 75 to take out all these people, is it possible or is it probable that at 74 it's going to unhook and come on down? Probably a smarter place to be, don't you think? So what I like to do as a trader, and again, this is just a bird's eye view, and I'm not going to get into a ton of detail, but instead of trading this at 75 and going long and getting smacked, let these people get smacked. Let them get smacked. Okay, price will come here, and there's a good chance they'll smack them right back that way. But what generally takes place after they come in? These orders here generally will go down to a lower level, maybe around 50. And you got all these people out of the way. They're gone. So if I want to get in at 74, now you got a free fall. Now, yes, you got orders a little bit lower. And again, I don't know what this thing's going to do. At this time of day, we're probably just going to head sideways a little bit. But if I'm going to get into a trade and I'm going to look at my system, the smarter money is to bet on the opposite side of this. And I don't want to be at 75. I want to be at 74 if I'm going to go short. Does that make sense? And you ask, what about 72? Well, here's the game they're playing. Looks to me like, SP, is at 72, we saw a bunch of orders down there too. Now, they could be real. They could be fake. We don't know. But probabilities say that if they plaster through the 161s, it's all smoke and mirrors. Okay? If they're not real at 75, they're probably not real at 72. However, here's the cool thing is and again, trading is all about risk, right? Trading is all about risk. Let's just say for fun that we decide to get in at 74. Price goes down to 72. Guess what we're going to do? Let's say if our stop is at 70, let's just say our stop's at 80. If price comes down to 72, we're going to move our stop down to 78. So we're just going to reduce our risk on the trade. Are all trades 100%? No. It's all about getting into a trade, reducing risk, and letting that thing run and take your profits, right? So we have a little bit of room. We'll reduce our risk and let that thing go. But what we're learning is that 75 is a pure smoke and mirror trade. We don't want to be in it. So one little distinction, one little nuance that can really help your trading is just getting a little bit more familiar with the level 2. Now, you don't have to be a level 2 master. You don't have to read tape. You don't have to sit down and watch hours and hours of screen time to see what's going on. You're scanning the horizon. You're looking at what's going on and seeing there's some big orders out there. Now, why not buy limit at 76? Why not? What the gentleman is asking is, let's see, the gal, Florian, I'm sorry if I butchered your name. Why not buy here? Well, you could do that. You could do that. What I'm going to tell you is you're playing more of a game of chicken than anything else. I am trying to get short. Why? Because when I look at a chart, Gerald, I look at chart formation first. Chart formation is the greater psychology of the move. It trumps your indicators. It will trump your indicators at all times in priority. So you could go long at 76, but here's the thing. And again, I get more into this in my course. If price already came down once and then came down again, and volume is going out, you know what? You probably, I probably want to take that short. But here's the thing too is I don't know what those orders are. I don't know the orders at 75 if they're real or not. See, that's the game. The game I'm going to play is show me your hand in poker, and then I'll make a bet. Isn't that probably a little bit more intelligent way to do it? That's the way I like to do it. Hey, show me your hand. Okay, well, you got a full house. I kind of see what you guys are doing. I'm not going to bet against you. I'll probably bet with you. Oh, you got a 4 and a 5. Okay, big deal. I'm going to go short. I'm going to bet against you all day. So I like to see what really took place, get some facts on the table, and then I'll trade after that, is what I like to do. But on the other hand, I've got guys who sit around the level 2 all day and just watch it night after night or day after day after day. I don't trade that way. I don't like to be in a trade for 2 or 3 hours. I don't like to be watching the screen for 4 or 5 hours and watching things. I don't like to do that. I like to take trades at specific times a day, but before I do that, I want to look at what's going on. Is there somebody out there bigger, badder, and stronger that's going to move the markets? Well, I'm going to make sure that I see them, I know what they're doing, and let them show me that they're a real order out there or not. And if they're not, then I'm going to be going in the other direction. Pretty simple, right? 4883 is a volume point of control, Bill. Yes, and that's why, on my chart I have horizontal volume. You've got to look at that. You've got to look at where the orders are accumulating. So you need to look at the ask column when you're shorting. I absolutely look at both. There are times when you'll see, I've seen this before, you'll see 300 here and 150 here and 150 here. And, they're as real as, as anything. And they will not go away. And you can tell, hey, these are real orders. So when I see that, you know what? I'm trading with them. It's so obvious when they're out there in big size, and I won't trade against them, or I'll just back away. I won't do anything, because there are times when people are showing such huge orders out there that a big gorilla comes in and just wipes them out. Guess what? That's not my trade. That's not what I do. Let them play the Guerrilla Games, and I'm going to step aside. But it just gives you some kind of flavor of where the big orders are out there. So if you were shorting, you would have shorted at 74, but if long, you would have gone long at 76. Well, let's just say this. If my system says, hey, look, Albert, I want to go long or I want to go short, I'd pick and choose my battles based upon where the big orders are placed on the level 2. Does that make a little more sense? Because, Albert, I don't know what your system is. I don't know what Rogers is or Gerald or what have you. What I am saying is, if your system says to get in, you darn well make sure that there's no one out there that could smack you, because how many times have you done that and it felt really, really good? Not really, right? So, and again, I don't know your system. But I'm going to tell you, you want to have volume on your chart, both vertical and horizontal, and you want to know what chart formation's in play. We talk about IB orders. Okay, IB can mean a lot. I've got 6 definitions of IB. Initial balance, interactive brokers, Iceberg orders. Okay, so Iceberg orders, great question. Here's what an iceberg order is. And I kind of talked about it a little bit earlier. You know, Goldman Sachs, they're out there and they're going to go ahead and they're going to buy 20,000. Here's their level 3 screen. They're going to buy 20,000 contracts, but they're going to only show 10 on the screen, right? Isn't it great, Frank? Level 2 is, like I said, is either a lie or it's not. If market is going up on 0 volume, guess what? If market is going up on very little volume, what does that tell you? I'll let you think about that question for a minute, Frank, before I get into it. So what they'll show you is if I want to go long 20,000 contracts, they'll only show 10, and this is called an iceberg order. And what will happen, and a level 2, you have to pay attention to the level 2, but you might only see 40 contracts out there, but as price comes down, guess what? That thing just does not budge. Why? Because there's someone out there sitting with really 20,000 contracts. See, they'll show 10, and as soon as those 10 are taken out, guess what? Another 10 show up. As soon as these 10s are taken out, guess what? Another 10 shows up. It will show up until all 20,000 contracts are done. Okay? So that's what an iceberg order is. And there's software out there. Order flow analytics will show you that. What's that other system? We just had this gentleman on last MarketFest, I believe. I'm trying to remember his name, but they do a very good job of showing you iceberg orders. That's a whole nother level of detail of what I do. So anyway, what I want to get into is just get more in depth detail as far as what's going on, as far as what I do. And, you know, so far in today's presentation, you learned a lot about how to get an edge using the level 2 screen. And what I'm basically saying is, just before you get into a trade, check your level 2 screen. Just before you get into your car, guess what? You know, make sure your tires are not flat. Make sure that you're gonna be able to drive off, right? So it's just common sense. And this is maybe one reason why you get into a trade and you get smacked. Now, sometimes you get in at news time and you take it the wrong way. That's another way of getting smacked. We're not going to get into that. But there's still more to learn. And there's just was not enough time today in this 1-hour session to show you everything that I do when trading to get daily cash flow. This level 2 training was originally part of an 8-hour presentation that we did on trading oil. And the training includes 3 specific trades that would very well you'll use in your insight to get from the level 2. And I'm going to show you about the Trading Summit online trading course. So at the Trading Summit, this was basically a live event that we did that we had many speakers come in and I spoke. And here's basically what people learned. There's 3 specific day trading setups that you can use to dominate oil futures markets. My favorite strategies for trading options on oil, and the bounce trade setup for day trading gold, and how to overcome your mental roadblocks and achieve consistent, lasting success in the markets. We also discussed the 2 types of buyers and sellers and how knowing how to sell them or how to tell them apart, which means the difference between profits and losses, the difference between limit and market orders, and what they say about order conviction. the real reason why price goes up, down, and sideways, and how to anticipate those moves in advance. So by the time you're done, you'll have soup to nuts, A to Z, step-by-step system for trading oil with complete confidence and authority. When you register today, you'll also get the following bonuses, 2 exclusive bonuses. Bonus 1 is the ETF growth formula. It's my 3-hour training on how to master oil ETFs with long-term options and how to supplement the daily cash flow from trading oil with additional monthly cash flow. And this is a $600 value. Bonus 2 is 30 days in my time trading room. Join me, and now this varies depending on what kind of market we're in, between 8:10 and 9:10 in the morning. If you're West Coast, that's 5:10 to 6:10. And we're going to trade live. We're going to trade oil. We're going to trade bonds, maybe gold. Gold's been moving a lot. Holy cow. Big moves in gold. And we're going to learn how to hit your daily trading goal in an hour or less each day. This is a $377 value. So how much is this worth? Added up, my students paid over $1,000 to attend this live event, plus traveling fees, including airfare, hotel, meals, etc. Now that we've converted it to an online course, you can save hundreds of dollars on travel fees. So if you add it up, the Trading Summit is $1,000. The bonus ETF formula is $600. Bonus 2, 30-day market trading room is $377. Total value of $1,977. And this in reality, you add it up, it's worth over $2,000. Now, I want to make sure this is affordable to the traders who really want it. So that's why I'm not going to charge you $1,977, or I'm not going to even charge you $1,000, which many people have traded or have paid, including travel, etc. But if you sign up today, you get the Trading Summit on-demand trading course along with the bonuses. It's just $297. And just think about what you learned so far today on level 2. Remember when I told you that story about the 2 guys at Schonfeld Securities trading side by side, trading the same system, but the guy on the left gave every trade 12.5 cents more room on how much money that made a difference in his trading style, his trading system. Now look, you probably have a trading system, you probably have a way of trading, and there's just something missing from what you're doing. Or you're one of those traders who, doggone it, you're going to get done trading, and tomorrow you're going to get into a trade, and you're going to get smacked. You're going to think of MarketFest, you're going to think of me, John. It's like, dang, he told me this is going to happen if I don't watch the level 2. Don't let that happen to you. Don't get smacked. We don't like that. $297 can save you, that can hopefully save you from one trade and pay for itself by not losing. Just think of your P&L at the end of the month, not getting smacked 2 or 3 times because you paid attention to the level 2. Is it true that futures markets can gap down through your stop and cause you to incur losses that are larger than your total brokerage account? How can you guard against that? Gerald, great question. I'm going to answer that question in just a few moments, because there is a fear out there of trading futures that it's a runaway train and it's high risk. Well, if that was the case, I would not be doing it. So I'm going to show you how I do that in just a moment, Gerald. So go to investing.com/summit. And again, for $297, if you can get better at just not getting into a trade once or twice a month because you paid proper attention to the level 2, it's worth it, right? Absolutely. It's a no-brainer as far as I'm concerned. And if you're one of the first 27 to register, guess what? I'm going to also give you a fast action bonus for the first 27 only. How to day trade OPM workshop. Oh, you're going to love the next guest coming up. I believe it's Connor, right? Is that right, Dan? Connor? Oh yeah, guys, this is awesome. You're gonna love the next guest coming up, because guess what, Gerald? This also answers your question partially. I'm gonna get more into it in just a second, but I'm gonna show you how to trade, not risk your own money. I personally believe, as a brand new trader, you have no business whatsoever trading your own personal money. You shouldn't do it. You're not ready for it. I mean, I would never recommend it in a million years. But the next guest who I would highly recommend, Connor, they're going to give you the money. They're going to give you all the money you need to trade with. You're never going to have to risk your own money. Now, you got to prove them that you can trade. But how would you like to take what I'm showing you today and trade with their money and not have any risk of your own? That's what I believe. So I'm going to do a live training session coming up on June 11th. And I'm going to teach you how my students and how to get funded with up to $250,000 other people's money. Yeah, you don't want to trade your own money. You don't. After you get good at trading their money, then trade your own. So I'm going to get into how to get funded as a trader, how to use a prop firm, which they're a company that will give you money to trade. And you know what? They'll show you how to do it. And I'll show you how to prove to them how to make money. So there's a cool bonus coming up on June 11th. And you can day trade without risking your own account. It's a $500 value. Go to winvesting.com/summit. Now, a couple quick things. I'm going to take all the risk out of this. I don't want you to be risking all. I want to make sure that the $297 you invest in what I'm going to show you with, you're not going to be at risk. Because I'm going to give you a 12-month, 100% money back, no BS action guarantee. Sign up today. Check out the course yourself. Just take some action. That's all I'm asking. Trade once a week, starting with a $5,000 in a real or simulated trading account, using any of the strategies that we've taught. After 12 months, if you haven't made any money, I'll be happy to give your money back. 80-20, Frank. If you make $1, you keep 80 cents, they keep 20, and you're trading their money. How about that? So check it out, winvesting.com. And just 1 or 2 extra winning trades will easily pay for the entire course. And with me guiding you in the trading room, and I'm a no BS guy, guys. As long as you're in sim, you've got nothing to lose, and you'll be mastering the trades that could easily make a big difference in your bottom line. So check out winvesting.com/summit. No, it's not. No, it's not. I know these guys personally, and I've got many traders trading with them, and they're a top firm. Whoever said that, they are absolutely wrong. Yes, I have gone through Top Step Trader, and I am a funded trader with them. So they are the real deal. And the reason why I know the real deal is because my son and daughter have also gone through their system and got funded. So it's the only way I would do it. Yep, hold on 1 second here. There we go. Connor Megan is coming up next, who is going to tell you all more about it. He does a phenomenal job. Oh, so you're Stafford. Okay. I've got people in the room saying, hey, I'm funded with a Top Step Trader. They're the real deal, aren't they? I think so. I know so. But now let's register at investing.com/summit. Now I was going to answer a quick question for, I believe, Frank. Whenever I get into a trade, always, I use stops. So let's just say for fun, I get into a trade. This is how I do it. This red line represents my stop. This green line here represents my targets. So when I get into a trade, I have my stop and everything out there. Now, our stop's 100%. No. When you trade the things that we trade, such as oil, S&P, bonds, guess what? There's enough liquidity to make sure that you don't get blown out. Now there's certain times that there's going to be so much volume going through, you could get skipped by a few ticks, but these are very liquid markets. They're very, the volume is so good that that rarely, if ever, happens. What do you typically use for your stops when trading and scalping CL? 5-tick stop, 3-tick target to 3-tick to 20-tick targets is what we do. It all depends upon what you're doing. Okay, so see how I'm moving my stop to reduce my risk? We always trade with a stop. You have to. If you do not trade with a stop, you're setting yourself up for a recipe of disaster. Because there are times when things will flood the market and you need to get out. What is the average percentage that the prop trader made first? Okay, they take 80%. I'm sorry. The trader takes 80%. The prop firm takes 20%. And they take 100% of the risk. So I'm going to get Connor to get into all those questions for you guys. Connor's up next. He great guy, very reputable firm. He'll answer all those specifics with you, but you know, part of getting funded with them is being able to pass their test. What's the average percentage that the prop firm makes? Yeah, ask them. They're coming up next, and Connor will be happy to answer that question for you. Bonds, John, I go for 4-tick profit, or 4 ticks on my first contract and 16 on my second, with a stop of 4 on bonds. So I'm going to answer a couple quick questions here before I wrap up in about 4 minutes. I'll get in. I know I've got a lot of questions, and I will try to get to as many of them as I can. What's your take on VWAP and peak volume? How does crude act around these levels? VWAP is generally a bounce off that level. If you have VWAP on your VWAP stands for volume weighted average price, and if you have that on your chart, it's generally a bounce in the opposite direction for 8 to 10 ticks is what it does, and that's because the institutions are trading off that quite a bit. So it's pretty important to have on your chart. A lot of what I do, I'm not always watching it, but it's important. I'm not going to discount that whatsoever. All right, winning percentages. Yeah, don't worry about oil or don't worry about commodities. Now, let's say you're trading natural gas, because natural gas trades light, and if you don't have a bigger stop on that, you're going to be in trouble. Thank you, Frank. I appreciate that nice comment. Feed Top Step here is also, yep. Top Step's a very reputable firm. Okay, well, great, guys. Check out investing.com/summit. And I really, you guys want to challenge you guys to get more into the level 2. Yeah, you have to spend some time getting to know it, but it'll get to the point, which doesn't take long, to where, your system says to get into a trade. Just before I get into the trade, I'm going to check the level 2. You're going to check the things I'm going to teach you in the course. And then from there, you can really, just 1 or 2 trades a month is all it takes that you decided not to take because you read the level 2 right. And it doesn't take a rocket scientist to learn how to do that. I've simplified it and made it a lot easier to do. So fantastic. Boy, we got a great speaker coming up next. Connor Megan from Top Step Trader. I know him. Great guy. Great firm. Their CEO, Michael Patak, was just awarded a nice award. I think it was from Ernst & Young on Entrepreneur of the Year. I wish they were around when I first started trading, because I would have saved hundreds of thousands of dollars. Because as new traders, we don't know what we don't know, and it would have saved me a lot of money. And then for those of you, I'd never recommend trading your mortgage money, your car payment, or any at-risk money. If you can use their money, I mean, it's just like real estate, right? Other people's money. So yes, we are recording this, Rosa. So I'm really excited for the next guest, and add to what I'm doing and what he's doing. Oh my gosh, it's phenomenal. So Dan, I'm going to give the room back to you, and Connor, welcome, and we'll go from there. So thanks. Have a great day. God bless.